as I was saying, in 2000 we had 6 what we call bear rallies, and in 1980 we had 2. And I can show that again here, of course. I'll spread out the scaling a little bit. I know it's not the best to see here, but spread that out. So that pretty much captures the whole 2009 financial collapse. So we can see we had like a leg down here. We had these were all good, like 10% rallies. We had another leg, and then it came up maybe 5%, and a strong leg down. And then we had another maybe 5% here, another leg down, another rally, and then finally we had one strong where basically everybody, and this is driven a little bit just by human sentiment, right? At some point everybody kind of throws in the towel, and we don't know here, but we can see shortly after we had our nice cross. We had our 50-day cross the 200-day, and look at how close that was to the bottom. So that was March, this was like July, and we got our first big buy signal. So this takes so much the human emotion out of it, and these continue to work. So there's some other ones going more to human emotion. There's surveys done for that. They ask people how bearish they are and how bullish they are. And a lot of these are kind of opposite. If a lot of people are bullish, that's kind of a negative, because only so many people can buy stocks. So if everybody's bullish buying stocks, and especially if it's a retail investor, you're probably becoming close to the end of a bear market. So these are just pure emotional type surveys. So these have been around for a long time. Right now, of course, a lot of people have lost money, so we're up to 49.73 people that are bullish, and this is a U.S. investor sentiment that you can get actually on white charts. So, and it's free. So in the past, we want to see this number get to about 55, so we're getting there, but we haven't reached it. So again, that's still bearish. Another is the one I just found about, actually. I haven't known this one for very long. I think it's fairly new, but it's the Eurobarometer. I'm not saying that right, I don't think, but it basically looks at the bullish sentiment, which I just talked about. So it was bearish, there's the same thing for the bullish. And it's looking at the forward PDE ratio of stocks, and it's also looking at the VIX. And of course, if people are very bullish, the PE ratio is very high, and the VIX starts to accelerate, then those are all going to give you a high reading. And we can see back in 2009 again, which is the red line here, that we got pretty much up to 1. We went all the way down to minus 1.3, and during the last 10 years we peaked out about 0.8, and we see that's trending down. But even with all that's happened today up to today, it's 0, and we're not even close to the -1 that we said in 2009, and I personally think this is going to be worse than 2009, because we haven't really addressed anything. We just pushed everything down the road. Federal Reserve banks just continue to print money, bail out the bankers, all that type of thing. And that's this one here again is still bearish. There's another one too. Since there's stock charts, you can get this one again free, and it's worked for a long time. And what it is you want to see, this is stocks above the 200-day moving average, which I talked about, and Right now, we've only basically got 12% above